What's going on, everybody? So today in this video I'm going to be explaining to you what an inverse fair value gap is. So I decided to make a video on this because I use these for basically every single trade I take and thought it was extremely important to explain part of my strategy to you guys, so let's get into it. So this right here is your basic fair value gap. This one is bearish. And just to go over a quick recap of what a fair value gap is, basically this is just a price imbalance, so they're also called imbalances, and it forms whenever there's a 3-candle sequence, and then the middle candle does not have candles surrounding it that wicks overlap. So as you guys can see here, this bottom wick does not overlap this top wick, and it creates this space between, which is the imbalance or the gap. Now if the wicks overlapped this middle box and did not cause a gap, this would not be a fair value gap. So this right here is what an inverse fair value gap is. So as you see, a bearish fair value gap gets formed, price comes back down, it then comes back up, fills this fair value gap with a lot of energy. As you can see, we didn't just fill it and then start kind of consolidating. We filled it and then we proceeded up very quickly. We had higher energy right through the fair value gap. It then price used the previous FVG as support to go higher, as you can see by this wick right here. Now, I've showed you guys what an inverse fair value gap is. Now I'm going to show you places on the chart where you can take these, and I'm going to go back and show you guys some of my trades that I've alerted live for free in my Discord. You guys should join up. It's completely free and I live trade every day. Let's get into it. So here is a good example of an inverse fair value gap in play. So right now the market formed a market maker sell model. We are in the PM session. Good area of liquidity right here in the zone because we have strong displacement starting the market maker sell model. So this is a very high interest spot. So let's look for a sweep of liquidity under this level right here. And then let's try to find displacement with the FVG on our way down. Okay, we have an FVG right here. Now let's see, we swept perfectly right under this low. Now I want to see us have a strong energy move up past the FVG. So as you can see, I'm going to be entering 2 buys right here, stop loss under, and I'm going to be aiming for a range right here, not super far away because it is PM session and it lacks a ton of volatility as compared to the early morning session, so I kind of just want to get in and out of this. So we have a really good risk to reward right here. We're aiming for about 40 points and risking about 20 points, a little under 20 points, and then it's a 2.26 risk. So let's see how this plays out. Instantly smack the TP for 1.7k. Now price should reject off of this level. It could go higher to up here, but I like to aim for my first take profit zones as the first level of, swing highs. So we have swing high here, swing high here, swing high up here. It's more of liquidity up here and swing highs. So we could reject off of here, or we would go up here and reject. We'll have to see. Okay, so we had a rejection right here. So we went a little bit higher than rejected. So that is the first example of how you can take a good trade with the inverse fair value gap. You just want to wait for a sweep of liquidity and strong displacement through the FVG, and then set your take profits for internal levels of liquidity. Alright guys, so now I'm going to show you guys a bearish example of an iFVG. So let's go. Alright, so it's important to note that we have all these equal highs levels, and that is a strong indicator of a good pool of liquidity is around up here. Now let's know what the market's doing. We need to sweep the zone up there. There we go. Okay, so we hit a sweep. Price might drop to here. It's super out of place though, and there's likely to be less liquidity in the zone. Slap it with a mouse, bro. Just slapped on a mouse. Goated. Alright, so we're going to slap him on the screen. He will show where the liquidity is going to be. So it's somewhere between these highs and this high. So we're going to look for entries around here. Keep in mind we have a 1-minute FVG right here. Okay, we have super strong displacement through that. I'm going to enter 2 sells right here. Then I'm going to put my stop loss up here. And then what I'm going to target is going to be this low right here. Now I could aim for this low, but it's better to be safe and go for one over here or down here. I'll take this one. Still an amazing risk to reward right here. Aiming for about 72 points here. Now let's see how this plays out. Also, I'm going to throw in one of my TPs right here to end this FVG displacement sequence. So let's see how it goes. Okay, we're on it perfectly. We went a little bit lower. Let's see. So I'm going to take off one of my contracts there. And then let's see. Price went crazy aggressive under that. So I guess we could have had our TP here, but you know, we're going to play it safe here. We're not going for these crazy risky trades. And that was 72 points. Really fast too. That happened very quick. So that is a bearish example for you guys. Now, if you have any questions, join the free Discord in my bio. I have a really cool community. If you guys are looking for some friends and some people to trade with and keep each other accountable, just join up. It's free. Link in bio. I'll see you guys in the next video. Peace.